federal government opened subscription for April savings bond. Instant electronic payment hits 1.3 million. 66 out of the Capital Market Master Plan initiatives in progress. The program is Business Express, reaching you from the network service of the Nigerian Television Authority. As ministries, departments and agencies defend their budget at the National Assembly, this edition seeks to look at the funding initiatives to actualize the 2019 budget. I am Amina Nujaim saying welcome to the program. The federal government of Nigeria, through the Debt Management Office, has offered for subscription savings bond for the month of April. The 2-year savings bond due April 10, 2021 is at an interest rate of 11.276% per annum, while the 3-year paper due 13th April 2022 is at an interest rate of 12.276%. Both offerings open this Monday. Significant success was recorded in information communication technology ICT industry as foreign and local investors struck about 38 billion naira on Nigerian startups in the second and third quarter of 2018, of which 75% of the fund went into Nigerian fintech. This was disclosed at a roundtable in Lagos by the Director General of the Nigerian Information Technology Development Agency, NITDA, Dr. Isa Pantime. He called on stakeholders to defend indigenous products and services so as to save the country from capital flight and create jobs for unemployed youths. as ministries, departments and agencies continue to defend their proposal at the National Assembly. Let's quickly note this. The 2019 budget deficit is to be financed mainly by borrowing of 1.649 trillion naira. Now, the amount will be split equally between domestic and foreign. There is also a plan to gradually shift away from commercial to a more concessionary financing in the foreign debt procurement. Anyway, Ibrahim Shaleng is a wealth management and alternative finance expert, and he will help us do justice to this topic. Welcome to Business Express.
Thank you for having me.
Now, the 2019 budget, what is your perception overall?
Okay, well, to be honest, I think there's nothing special about this budget. Pardon me to use the term, it's a goalkeeper's budget, because it's not, there are no parameters that are looking to perhaps break through what we've been experiencing in the past 4 years, which, you know, expectedly, it's been basically tracking the economic recovery growth plan, which the government had put through 4 years ago.
So you just made mention of goalkeeping.
Yes.
What do you mean by that?
What I simply mean by that is, you know, if we're using a sporting terminology, you don't concede goals. However, you're not necessarily going out to score goals, right? So we're not pushing the boundaries in terms of what the country needs. We need far-reaching policies that are going to drive us out of this recession, rather than simply maintaining the status quo that we've had over the last few years.
Well, we have been out of recession.
Sure. I think this out of recession is not necessarily a function of, pushing forward far-reaching policies. It's mainly been a situation where oil prices have kind of rebounded, and we've plugged up some leakages. Essentially, that's what has brought us out, rather than essentially having, you know, revenue drives outside our oil revenues.
So, in one sentence, 2019 budget, to you, what is it?
Safe. Nothing far-reaching. It's just safe. It doesn't really take us out of where we currently are, and, you know, project us to where we perhaps need to be.
Okay, financing the budget, if you agree, it's a bit a tough one. Now, with the increase in minimum wage, where do you see this taking us?
Well, again, look, our budget has been, for probably the last decade, has been basically we are financing consumption rather than production, right? So if you look at the parameters, I think for the last 10 years, majority of actual revenue has gone into our recurrent expenditure. So what we actually have for capital development is minimal, and we keep having supplementary budget. Well, in most developing countries, you're looking at a maybe 60-40 split, or perhaps even 70-30, depending on how aggressive you want to move. And 70% needs to be going into capital development, while 30% needs to go into perhaps your recurrent expenditure. But we have the reverse in the case in Nigeria, because, you know, it's more difficult to cut costs than to perhaps get revenue, so to speak.
Now, you're talking about cutting costs. If Nigeria is supposed to cut costs, where do you see it cutting that cost?
Well, I probably won't be the most popular analyst by saying this, but our cost of governance is way too high. You know, we need to look at what government is providing for us in terms of services. We have an over-bloated civil service. We look at our, our legislative, we look at our judiciary. All the functions of government are too expensive in a country that is, perhaps facing a fiscal crisis.
Okay, with an overall budget deficit of 1.859 trillion naira, which is approximately 1.33% of the GDP.
Yeah.
Now, is Nigeria's borrowing plan realistic for the year 2019?
Well, I don't think we necessarily have a choice. As I mentioned earlier, we essentially have a revenue deficit compared to what we have budgeted in expenditure. So we don't have a choice but to fund that. And essentially, we have about 4 trillion in recurrent expenditure, which is salaries and pensions, right? Not to mention debt servicing. So majority of our revenue is actually going directly into just paying salaries and pensions. So you can see where the fiscal crisis is. So we need to either cut costs, which is the difficult option, or to try and generate more revenue. Now, that aspect also
Now, what do we do about that?
The revenue aspect?
Yes.
Well, you see, we're in a catch-22 situation, okay? If we look at the mismatch between the monetary and fiscal policies, I think they're starting to converge slightly, where you had CBN recently dropping the MPR rates. However, it's because
would you consider the drop significant?
it is insignificant in the sense that it's not really addressing what the country needs. I mean, we're looking at a 50 basis point reduction, which is hardly far-reaching. However, you're probably starting to see that on the monetary side, we're having some more, or should I say, slightly more expansionary policies, which in essence is supposed to drive production and making cost of financing cheaper. However, it's not really far-reaching enough, but perhaps it's a step in the right direction.
Okay, now talking about financing, borrowing is central to the 2019 budget. Now looking at the domestic and foreign borrowing, what do you make of that?
Well, I think...
Is it realistic?
It is realistic in a sense, because we do not necessarily have the capacity to be able to borrow more from the foreign markets, so we have to be reliant on the domestic markets, which is obviously more expensive. However, when we look at again, the government is looking to drive GDP growth. I think on the budget we're looking at 3% GDP growth. However, how do you get that growth when you have policies of high contractionary policies on the monetary side? So if government is not spending to drive growth, and on the monetary side you're not having expansionary policies, then how do you expect to drive that GDP growth?
You're talking about spending for growth.
Yeah.
Any particular areas of emphasis?
Well, look, I would like to see a situation where we are spending more on developing the SME sector. I think necessarily that is where growth is going to come from. We can't rely on government doing everything. Government provides the services. Government, the intermediary process. We have government now going into the microfinance banking sector. It's counterproductive, and I think it doesn't really address the situation, because again, government is more a service provider, or should be more as a service provider rather than a driver in terms of.
Would you say that, or would you agree that there's so much concentration in the center?
Most definitely, and I think that is why we find ourselves in this situation. You cannot expect, the economy to be booming, because government essentially should not be a profit-making venture, essentially, right? It's a service provider rather than a profit-making venture. So unless we move away from that center, I mean, let's look at for instance, our mining sector. The mining sector is only contributing 1.2 billion to the budget of 2019, which is absolutely ridiculous. We need to be able to, bring in private funds into that sector, and potentially you have, perhaps even more than the oil sector, we have, sitting reserves that could drive revenue in that sense.
Now, talking about revenue, what do you think government should do to increase revenue generation outside the conventional sources?
Well, I think there's certainly one or two things the government can do, probably not favorable. Some of the easier options are to increase taxation. We might look at devaluation as well, although again, I said it's not a popular thing to do, but you might look at things like devaluation and increasing taxation.
Devaluation?
However, sure, you have to, you look at quantitative easing, where you are essentially buying up government bonds to be able to release funds back into the system, right? And, the effects of that is that the currency might devalue. However, it means our exports are probably more competitive and reduces cost of finance essentially for SMEs.
Wouldn't you say that would have an effect on the purchasing power?
Sure, that's why I said it's probably not a favorable thing, simply because we're more import dependent in this country. If we were a country that had net exports, perhaps it would probably be something to consider. Okay,
now talking about revenue generation, a lot of talk about tax. Should tax be increased?
Yeah. It's again, look, we are in a situation where the country has been squeezed and squeezed and squeezed. I was fortunate to be in the presidential quarterly business review sometime last year, I believe, and the then finance minister, Kemi Adeosun, said, I think only about 20 people in the whole of Nigeria pay 10 million naira tax and above, right? And out of that 20, only 10 pay 20 million naira and above. So, I mean, when you look at it, it's a case that we're not even being efficient in our taxation. So rather than increase taxes, which tends to, hit the middle and low income people, I would rather see a situation where we're being a bit more efficient in our tax collection, right? Look at taxing. I mean, look, we have the banking system that declares profits year on year, in billions.
So you're suggesting corporate bodies then?
Well, it is the more sort of equitable way to go if you want to increase taxes.
Okay. Now, earlier on you spoke about leakages.
Sure.
Should government look a bit harder at blocking leakages?
Precisely. I think that is the way to go. Look, if it's harder to generate revenue in an environment where you're not really in control of the market forces, okay? So I think the focus in government should be about reducing costs and reducing leakages, wastages. I think the government is looking towards that. If you look at our custom remittances has increased year on year. So even from the ports and the rest. So definitely that's probably where in the short term, government needs to look at more reducing wastages and leakages and costs rather than essentially trying to, wave the magic wand to drive revenue.
Okay. Ibrahim Shaleng, a wealth management and alternative finance expert. Thank you for joining us on Business Express.
Thank you for having me once again. Thank you.
The Nigerian stock market ended last week of March with marginal decline over the previous week. Let's have details as complied by Muplang Dakok.
A total turnover of 2.6 billion shares worth 12.79 billion naira in 15,558 deals were traded in the outgone week by investors on the floor of the exchange. The NSE All Share Index depreciated by 0.31%, while market capitalization appreciated by 0.51% to close the week at 31,041.42 basis points and 11.672 trillion naira. The financial services industry measured by volume led the activity chart with 2.3 billion shares valued at 8.6 billion naira. The ICT industry followed with 140.5 million shares, while the third place was the consumer goods industry. Trading in the top three equities, Wema Bank, Chams PLC and Zenith Bank PLC accounted for 1.9 billion shares worth 3.4 billion naira in 1,642 deals. Also traded during the week were a total of 85,775 units of exchange-traded products ETPs valued at 1.187 million naira, executed in 22 deals, and 3,453 units of federal government bonds valued at 3.565 million naira. All other indices finished lower with the exception of the NSE Premium, NSE Consumer Goods, NSE Oil and Gas and NSE Lotus 2 indices, which appreciated by 0.15%, 1.07%, 3.56% and 1.02%, while the NSE ASEM Index closed flat. Summary of price changes shows that 21 equities appreciated in price, 36 equities depreciated in price, while 111 equities remained unchanged, higher than 98 equities recorded in the preceding week.
Thank you, Muplang. The Securities and Exchange Commission (SEC) has disclosed that of the over 90 initiatives outlined in the Capital Market Master Plan, 66 initiatives have commenced since 2015, out of which 13 have been successfully completed. The Acting Director General of SEC, Ms. Mary Uduk, identified some of the concluded initiatives include dematerialization of shares, recapitalization of capital market operators, setting up of national investment protection, and the establishment of the West African Securities Regulators Association. She did point out that 55 initiatives are at various stages of implementation and is optimistic that many of them will be concluded before the end of the year. Uduk said SEC and market stakeholders have taken up the initiative outlined in the master plan document in a systematic manner, while also painstakingly engaging with government, its agencies and other critical stakeholders whose support and collaboration is required to achieve the objectives outlined in the master plan. Meanwhile, at the close of trade this Monday, trading on the Nigerian Stock Exchange ended on a negative note to begin the week as well as the month. The NSE All-Share Index lost as much as 1.64% to close at 30,531.69 points, while market capitalization stood at 11.5 trillion naira. 1.724 million shares exchanged hands by investors in 3,251 deals valued at 3.678 billion naira. The financial services industry led by Wema Bank and UBA recorded the top trades in terms of trade volume, with Wema Bank trading as much as 1.4 billion shares. For a look at global stocks, Bossede Abel is our guide.
Global stocks began the first trading day in the month of April mostly positive. South Africa's JSE Africa Top 40, Nairobi All-Share, Namibia Overall Index and Ghana's GSE Composite Index opened on the rise, while Tunisia's Tunidex started low. Major markets in Asia flowed following data released over the weekend that showed economic activity in China unexpectedly bouncing back in March. The Shanghai Composite Index went up 2.58% to 3,170.36. Hang Seng Index was up 1.76% in its final hour of trading, while Nikkei topped 1.43% to close at 21,509.03. European stocks surged as investors in Europe digested stronger than expected Chinese data. DAX appreciated 1.27%, FTSE 100 0.65%, and CAC 40 0.75%. U.S. stock futures rallied early following stronger manufacturing data out of China. Dow futures indicated a higher open of more than 150 points, while the S&P 500 and Nasdaq indices were also in positive territory.
The International Monetary Fund (IMF) has said that Nigeria and other countries outside the Organization for Economic Cooperation and Development (OECD) group lost about $200 million annually due to unfair global corporate tax system exploited by companies to shift profit to low tax location. IMF President Christine Lagarde disclosed this while speaking on corporate taxation in the global economy at the Peterson Institute for International Economics, Washington, D.C. Stressing the need for new corporate tax rules across the globe, Lagarde said it may be difficult, but it is possible to create a corporate tax system that better reflects the changes in the global economy. Highlighting three major reasons for urgent reforms of global corporate tax system, she said this means countries must work together, and make progress requires coordination among all and in the right direction. Let's take a look at the exchange rate in the country. The federal government has set up 6 cashew processing plants in 4 states of the federation. Minister of Agriculture Adobe says Enugu and Benue states have 2 plants each, while Kogi and Oyo states would have 1 each. The minister said the initiative is aimed at adding value to produce, create employment and wealth in the country, as well as reduce waste. He identified access to credit as the major challenge affecting the viability of crop, with a good plant costing as much as $2 million. The minister said the federal government intends to stop the export of raw nuts and to process all cashew here, with the hope that some plants would be ready in the course of the year. Time now to take a look at how commodities are faring in the global market. With that, we come to the end of this edition of Business Express. Be informed that all previous episodes are available on YouTube, and you can also communicate with us on Twitter, and the handle is NTA Now. Have a fruitful week ahead. I am Amina Nushain.